Welcome to the October 17th, 2022 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group Asset Management, your financial weatherman with your fast-paced tour of the global markets. What a week it was, a trading week. Inflation headlines still all over the place. Everybody complaining about inflation at the grocery store. It feels like the 1970s. I'm going to show you a parallel with the 1970s that could actually set the stage for a fabulous 2023. And we're going to talk about some bargains, of course, as we go through. This is the year-to-date for the S&P 500, the equity market blue chips, a minus 22% as of Friday. Well, the NASDAQ was worse. It was an ugly week for tech stocks. The QQQ, NASDAQ 100, the big tech companies down 32% for the year. Absolutely a bear market. Well, what's happened here? And here's some clues. We've been picking up bargains all through this right here, and we made a slight new low ahead of the inflation report, which I'll get to as well. But I want to cover something that happened this week that was actually another interpretation of the inflation numbers validated by the market. Tremendous volatility. Let's go through what happened Thursday. So Thursday, about to do the market report on the radio stations, and the Dow was up 300 points. Just 3 minutes later, the Dow was down 500. Good thing I double checked. It was the inflation report, so an instantaneous drop in the Dow, 800 points. Then, throughout the day, the Dow went from minus 500 to plus nearly 1,000, a 1,500 point swing. What happened? I think I have the answer right here, and it signals several strategy implications that I want to walk you through. All right, so on this graph, what's this green line? So the miserable yellow line is the NASDAQ. Then we've got the blue chips right here. It's the bear market driven by the Fed tightening cycle, and there's your inflation. Whoa, look, hit a peak of 9.1% trailing 12 months. Is that the most important number? For those of you that took calculus, the slope of the curve may be the most important number, and it may explain trading on Thursday. But notice this, inflation's actually moderated. Yeah, it's still high, and you're still hearing about it, and we're still feeling it at the grocery store, utility bills, everything. This is inflation by the month. And you could see, whoa, by March, this was miserable. And by June, this was, whoa, June was the most miserable month. And then what happened? Look at this. We get a 0 for consumer inflation. We get a 0.1, and then we got 0.4. First, the market thought that was bad. Then some people added this up. This is what I think they were adding, the institutional investors. 0.1 plus 0.4, that's 0.5. That's a 0.5% for 3 months. Annualize it, it's 2%. What is 2%? That's the Federal Reserve target. Yeah, it's only 90 days, and this was really bad, and we're still getting some things that show inflation. I get that. Used car prices are down back below last year. We covered the commodities here. That's why you subscribe to YouTube, McGowan Group, because each and every week we bring you this. We were telling you 3 months ago that inflation is not as bad as what's being reported, that it's already moderated. Remember that peak on that graph? Keep that in mind. This is producer inflation for people that make stuff, companies. Well, look at this. Here was that ugly June. We're all worried about it. Markets hit a temporary bottom. Whoa, minus 1.8% for producer inflation. Then it's a minus, here, a -1, and here we get 0.3. We're going to add those up. What does it tell us? It tells us that prices for companies actually fell, costs, despite labor being up and rent and everything else. You've got deflation in the producer market for 3 months. That is not the trend you see right here. Totally different trend for 90 days, even though the number for The last month was a disappointment at 0.4%, which would be an annualized 5% inflation. Why is that important? I'm going to harken back to the 70s. Nixon had wage price controls. Carter made it even worse. And it was bad policy, overregulation, overspending. Does that sound familiar? Yes. Okay. So here's what happened. This is the miserable 73-74 bear market cycle. My dad, Papa Dean, was an advisor back at that time, and it was not fun. He actually would stop by Mrs. Baird's bread to get cheap bread directly from Mrs. Baird's. It was that bad in the 70s. Now, here's the market rally that got Papa Dean to buy a Camaro. And what happened right here? This blue line is inflation. Does that look like the green line? It hit a peak, and then it came back down, and you got a recovery in the equity markets. It was still miserable for the rest of the 70s. So you really have to be astute, and you have to pick your spots. In the 70s, oil and gas was overregulated. Sound familiar? Well, oil and gas was one of the best investments you could make because Nixon created an energy crisis and Carter made it even worse. Wow. What else worked? Companies with pricing power, medical dividends. The company's medical dividends at a low PE with rising dividends, increased earnings, that also is up for the year. Those are two clues for inflation. This is federal funds rate. Here's the Fed tightening. They're taking the cost of capital, currently 3.25%. They're supposed to go to 4%. Well, look, they're already back to 2008. They over-tightened right here, and they created a disaster for their customers, the banking system, and they created high unemployment. They're aware of that. This is the 10-year Treasury, the yellow, that determines the mortgage rate. It's the highest since 2008 when they were over-tight. That is probably not lost on the Fed. What does it say? We're probably at the end of the inflation and tightening cycle. Here's the S&P 500. There's a little good news built in here. Earnings for this quarter coming in slightly negative. Okay, that's this right here. But this is how much money the S&P companies make every quarter. Oh, wow, that's a big spike. And when does that get announced? That gets announced in January. And there's going to be ugly tax loss selling. And you can pick up bargains when other people are selling for tax loss reasons. And likely the January reports are going to be quite good, and then on up from there. Those are what the analysts project, and they're usually a little overly optimistic. What's this? This is a disaster. This is Bitcoin. Whoa, inflation's high. Cryptocurrency was supposed to be, hey, if the dollar's going to fall and inflation's going to be high, I'm going to get me some cryptocurrency. Well, how'd that work out? Minus 66%. Inflation doesn't make crypto go up. So we blew open that myth. If you go to networthradio.com, this weekend's long play program, what we're saying is that crypto may be in a long, slow, painful death, and out of 21,000 cryptos, there may only be 5 survivors. I'm Spencer McGowan, President, McGowan Group Asset Management, your financial weatherman. Thank you for subscribing, and you can share with your friends that ask you what your take on the current markets is. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the net worth media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.